Hello, everyone. Welcome to another episode of Stalker Team. Welcome to Stalker Team, the Investors Channel. Uh, this episode, I will be discussing what exactly is my more or less the most important thought on what is happening in the stock market, especially the US stock market and by extension the global stock market. Is this the end of the market? As an investor, should you be selling off everything you have and going into cash, or even saying bye bye to the stock market for real? But um whether you want to do that or not, but I have this episode to actually share what I think is going on, where I think this will likely hint, not necessarily to predict the market, but what exactly is my opinion. I've gotten a whole lot of feedback as to, oh, what do you think we should do? What do you think I should do? But at the end of the day, you still have to do your due diligence and make your own decision. But this episode is majorly, mirroring my thinking and why I think this is another episode to actually reflect on you being an investor. Before I go ahead, every information, just as a disclaimer, every information shared on this channel is for education and information purpose only. Do your due diligence or consult your financial advisor before making any decision. On that note, thank you so much. If you haven't subscribed to our channel, subscribe, put on a notification bell so that you don't miss any update. And more importantly, please give this video a like, because when you like this video, much more people will actually see this video that they can benefit from, especially in the time of uncertainty that we are in the time of despair. A whole lot of investors are not really happy about what's going on to their portfolio, but I am here to actually bring more clarity and also share my decision and my personal opinion as to what exactly is going on and where we are actually likely to find ourselves in the next couple of days or weeks or months. And on that note, let's just jump right in. So just a recap. You can see this chart, this board actually shows what actually happened last Friday. It was yet another day of huge sell-off, apart from the Thursday. That was the day after the quote-unquote Liberation Day, when President Trump announced those reciprocal tariffs. Thursday was very, very bad, and Friday was worse. It was like the whole world was coming to an end. But at the end of the day, you don't want to actually lose focus as an investor, because the stock market is not necessarily a place where the market keeps going up without some pushbacks here and there, whether serious pushbacks, mild pushbacks, in and out pushbacks, and push to the front in terms of pullback and the market going up and down. But the stock market is very, very volatile. So if you're an investor, you actually witness what happened on Thursday and on Friday, and you've not sold out what you have in your portfolio. I think you might actually also prepare yourself for what is likely to happen on Monday. The Monday might be a different day. It might actually be a day where the sell-off actually cools down a bit, but it might actually be a day where the sell-off continues to actually get more aggressive. But this episode really is basically to put that word on the ground, especially what exactly is President Trump looking for? How far is he going to push this? What exactly does he want to achieve? What is likely going to happen? Not necessarily predicting, but just sharing my opinion. So, on that basis, we are going to actually have a conclusion as to where exactly we might find ourselves as investors. So, Trump wants a reset from an economic point of view and a geopolitical point of view. He has said it during the campaign that made him the president. And as a disclaimer, I have no endorsement for President Trump. I am not also opposing what he's doing, even when I disagree with the basics and the method and even the result that he's going to achieve. I disagree in all forms and shape, but I'm not even endorsing what he's doing. But I'm just going into his thought pattern and what he think he wants to achieve. So Trump wants economy of the US, the economy of the US to actually go through a reset. He wants to bring back production, manufacturing, every industry manufacturing of goods, not just services, not just technology companies, Apple, Nvidia, and the likes of Microsoft, Amazon, and the rest. He wants manufacturing of everyday goods to come back to America. Whether that makes sense or not is yet to be seen. But also, on the geopolitical point of view, he also feels the US is at the mercy, or could be at the mercy of China, if we have something that was close to what we had during the COVID pandemic, where the US couldn't even manufacture its own PPE, personal protective equipment. The US couldn't even manufacture so many things, and there was huge crisis during that pandemic. So he wants manufacturing, production to come back to the US. He also wants the US to have the upper hand. Whether there's going to be, quote and unquote, a war in the future or a pandemic, the US will be a bit more self-sustaining. Also, he also believes that the US is having a huge debt burden, over 30 trillion in debt and still counting. And about 9.2 trillion is going to mature this year. And if he is able to actually cool down the market by more or less, quote and unquote, crashing the market, a whole lot of people will be very scared, and they will take the money out of the stock market and buy the US Treasury, which is the US debt. And when more people buy something, what happens? It basically crashes, because when it comes to the debt and the treasury, the more people buy it, the more the interest rate goes down. So if the Federal Reserve is not ready to reduce interest rate for Trump will likely want to crash the treasury market, so that the US will pay less on interest when this 9.2 trillion matures this year, because the US is already in debt to the tune of over 30 trillion, and 9.2 trillion is actually going to mature. So he wants to pay less for that. If it crashes the market and more people buys the US debt, then the rate of what US is going to pay will be less. So that's that. Also, in 10 years, President Trump believes the US will be able to save about $500 billion in 10 years. Yes, it's a drop in the ocean, but it's something that he wants to brag about. So by imposing tariff on trading partners in the EU, in Asia, and also China itself, which is the world's factory, it believes the US can also make money by doing that. But a country that is already in debt to the tune of over 30 trillion, looking to save 500 billion, it's not just quote and unquote a joke, but it's just something that it's not really rational, it's not practicable, and it's not necessarily going to yield the result. The activity of Elon Musk through Doge, they also want to cut about 1 trillion in government spending. So all the old layoffs that is going on in government agencies and departments, from the USAID to a whole lot of cut in spending, or even total freeze. Saving 1 trillion, even if the US saves 1 trillion, then it means that if the US wants to pay off its debt, which is still counting, the US needs about 30 years to actually get 30 trillion to pay off the debt. And mind you, this debt is counting every minute, every second. So whether this is realistic is a no-brainer. It is not realistic, if you want me to say so. Also, President Trump believes, is going to boost economic growth, because when import prices actually rises, people, or the average American, want to buy American products, not just the tech services, the tech products or services, quote and unquote. So if you also continue to raise tariff, what will happen is that it is the domestic population that will actually pay much more in prices at the store, or anything they are buying, even if you cut the taxes that they are going to pay when they actually earn income, they are actually even paying more for prices of what they are going to actually eat and drink. So at the end of the day, no one actually gains, but the domestic economy still suffers, really. But you never know what politicians actually think. Also, Trump looks to raise this year alone about $700 million. So, if you look at how much he wants to make from all of the reciprocal tariff, that the base rate is about 10% on countries like the UK, and countries in some Asian countries are having close to almost 90%. I don't actually think 700 million is going to actually solve a huge deficit that the US actually has. So, and to look at that, you could actually see that in the end game of it, President Trump also wants the US to have a much more stronger leverage against China and against the EU. There is this feeling that the President Trump has, feeling of quote and unquote, that the US has always been used, has always been cheated in trading relation. China actually boost local production, local manufacturing by subsidizing local manufacturing. The EU also quote and unquote does the same, but they still tax or raise much more tariff on US product, and US product don't want to even bring their product to China or to EU, because the tariff is quite high. So at the end of the day, the US is forced to buy their product and not necessarily these countries buying US products. So there are a whole lot of complexities to this. From the food industry alone, the standards of the US food industry, quote and unquote, is seen to be very low. Some of them are seen to have so much chemical, so much processing, that in some countries, especially in the EU, they are not seen as fit for drinking or eating. So a whole lot of things actually go into the mix. American producers, especially in the food industry, are they ready to actually abide by the standards of safety and production that is required in countries like the EU and some part of Asia? So the answer might be no. So at the end of the day, this is not necessarily going to change anything per se. It's just going to cause much more disruption. So on that aspect, I'm going to actually show you a chart, and I'll show you this chart before I come to my closing conclusion. If you have watched this video to this point, please give this video a like so that much more people see it. If you haven't subscribed to our channel, subscribe, put on the notification bell so that you don't miss any update that we bring to you. So join me as I go to the chart of the day so that we can bring this into perspective. So here is the S&P 500 index, and as we can see, this year alone, the index has actually lost about 14, almost 15%, and on Friday alone, the index lost about 5.97%, which is about 6%. If you go to the Nasdaq 100 index, the Nasdaq 100 index is now obviously in correction territory. It's lost about 17, close to about 18%. So for me, I wouldn't want to say any investor shouldn't panic. Yes, no one wants to see red. No one wants to see the value of their portfolio going down. But if you're an investor, you really have to be an investor, and that's why I will always go back memory lane, so that we actually put things into perspective and we don't necessarily take decisions that are going to be regrettable or regretted in the nearest future or in the next couple of coming weeks. So because where all of this is going is very, very certain. It could be very, very predictable, even if you can't actually predict the actual time when all of this uncertainty will end, but it's quite predictable. Why? So if you go back 5 years ago, on the Nasdaq 100, for instance, 2021, when we had the COVID pandemic, 2020, 2021, you could actually see, as a matter of fact, if I go back much more than that on the chart. If you check around 2021, yes, 2020, 2021, you can actually see we had that huge pullback when we had the COVID pandemic, we had the lockdown around March 2020, and the market struggled for a couple of months until we had the reopening and also the huge stimulus that actually entered the market. What happened? The market moved much more than it has ever recorded. We had the Russia and Ukraine. For some of us watching my channel for some time now, you can actually see I've used this argument over and over again, and it's sounding like a broken record, but it's just the same method. It is so predictable. The stock market is always very predictable. Any negative news that persists for some couple of days or weeks and is likely to affect the economy will always make the stock market to panic and a huge sell-off happens. But once we get that clarity or resolution or negotiation happens, the market always comes back real hard. The same thing for the S&P 500, which is the most important index. You can actually see in 2020, you can actually see that pull down, huge drawdown, and after everything was cleared, or more clarity, the pandemic getting much more under control, you could actually see the market going up. And after that, we had the Russia and Ukraine, and everything went up. And now we are at this phase now. So that's exactly what's going on, and that's exactly what I think. And now to my closing argument and what I think I would do and what I think is likely to play out. Not necessarily predicting, but more or less actually showing the bigger picture of what you should be looking at as an investor. Come with me. So, to be fair to Trump, if anything that he has been doing, if he's going to achieve anything at all, if he's able to push this to some few weeks or few months down the line, there could be a renewal in the production and the manufacturing boom for the steel, autos industry. Those industries are going to actually boom. If you check some of those stocks of steel and automotive industries, companies that actually produce vehicles or steel manufacturing in the US, they're actually booming now. The losers in the short term and the mid-term are actually the tech industry, and so you could actually see all of the major tech stocks, from Apple to Nvidia to Amazon to Netflix to even to Palantir, all of these stocks, because they are highly speculative and their valuation is always higher. However, if President Trump actually miscalculates and he gets this wrong, this is what's likely going to happen. So it could actually drive the US into more debt, because if countries and companies stop investing in the US, if they don't believe that President Trump has a winning formula to actually get leverage over these countries to negotiate or even reduce the tariff that he has imposed, the failure will actually lead to much more jobs leaving the US, because some countries and companies might just want to wait out that President Trump only has about 4 years or 3 years now to spend, so they are likely looking to wait it out, let the uncertainty continues, let the ups and downs continues, and once it's about to get out of the market or out of office, if you may say so, they will still go back to investing in other countries, or not just investing in US manufacturing, or many of them are actually roll back their plan to invest in US manufacturing. So the job losses in the US might not actually end, or the manufacturing jobs that is being predicted might not come to the US. So what do I think in all of this? I actually think what President Trump is practicing is very, very similar to what we call brinkmanship. And in this regard, in this context, economic brinkmanship. And what does brinkmanship actually means? It's the art or practice of pursuing a dangerous policy to the limits of safety before stopping, especially in politics. In this regard, this is economic brinkmanship. That's what I think President Trump is doing. He is not necessarily going to push this to the end, because the repercussion of continuing to stoke uncertainty, continuing to stoke chaos and a whole lot of back and forth in the market is more dangerous and much more negative to the US economy compared to even the EU or China. Because as we speak, just as President Trump always say, he doesn't have the cards in front of him. The cards do not actually sit in his favor. So if he doesn't have the cards, the only thing he can actually do is to push his arguments, push his threats, push all of his power to the edge. And what he's going to do is to call these countries and negotiate. And that's what I think he's trying to do. So that's why you as an investor, you must not you must not lose sight of what you are actually in the market to do. You are in the market to invest. You are not in the market to gamble. You are not in the market to actually read the mind of politicians. You are in the market to invest. So you have to actually stay in the market, because if you allow yourself to be robbed of your stake, of what you have in the market already, and you sell off by taking losses that could actually reverse in few days time, or in few weeks time, or in few months time, you will actually want to come back to the market, and then you make more losses doing that. So for myself, I wouldn't be leaving the market. I wouldn't necessarily be buying so much, but I will actually buy when I see that opportunity, and that opportunity is already everywhere in the market. A lot of these stocks are actually now undervalued, and they are at ridiculous valuation on the downside. So that's why I think is going on. President Trump will not want the US, for instance, to have a recession. He would not want the US economy to actually collapse totally. That would be very catastrophic for the US, and also for him as a person, and also for his party. So not just politics. The US economy is too much important for an unchecked uncertainty and unchecked chaos to pervade the US economy. It's an economy that actually rely on credibility, that relies on certainty. Certainty is what the market needs, and I believe that this certainty is not too far. You can't predict it, but you can just wake up any moment, and you hear that China and the US, they are now under lock and key. They are actually having discussion. The US is now having discussion with the EU. All of these things are surely going to play out, because the repercussion for the US economy, for President Trump himself, is quite catastrophic. So on that note, thank you so much for watching. Thank you for joining us, for watching this episode. If you have enjoyed, or if you have learned one or two things from what you have watched so far, please give this video a like, because much more people will see it. Also, subscribe to this channel. We love all our subscribers. We are now nearing about 300 subscribers. That's a moment of joy and also understanding for us that we are making an impact, and we believe if we can get 300 subscribers, we can get to 1,000, 2,000, and so forth, so on and so forth. It's not about the numbers really. It's about we making impacts and actually adding value to whoever is on this channel. Thank you so much. Till next time when you watch another episode, hopefully we'll be bringing you much more coverage. Keep investing, keep going. Take care, and bye-bye.